G'day traders. Today we're going to be talking about day trading the short squeeze on gold. Stay tuned, we'll be right back.
Well, obviously the term short squeeze has been in the news a lot lately with the GameStop and, the big news that happened over the last few weeks. And, of course, all the drama that continues to evolve based on the Robinhood issues and whatnot, and Read It and Wall Street Bets. What I'd like you to do before we get started, though, is help me squeeze the like button so the YouTube algorithm can get our videos out to more traders.
G'day traders, Stacey Burke from Stacey Burke Trading. Today we're going to be talking about trading the short squeeze on gold. Last night, just as the US session 12 candle window started, we had a textbook perfect short squeeze that had built up from the London session. We're going to review Asia and London from yesterday, but we're going to target specifically the short squeeze. As I've mentioned before, some of the bigger trades evolve over the course of the day as Asia and London start to expand the trading range. Yesterday was a textbook example of an opportunity that happened right at the beginning of the 12 candle window on the 1 minute charts, using our 15-minute levels, round numbers, a 33 style trade where we had 3 pushes into the round numbers and a 1, 2, 3 in the last 15 minutes prior to the US session. We're going to review that setup and just review basically the short squeeze. Short squeezes have been in the news lately a lot with GameStop, traders recognizing that the stock had been shorted more, a percentage greater than the actual shares in circulation. Obviously all that's available. More people can go read further about that about the Wall Street Bulls or Wall Street Bets and the Read It website, where traders had been building the opportunity to participate in a short squeeze that had built up against institutional money for an explosive move. Now, in any market, I don't know so much about the shares. Obviously, the stock market in the US, where you have to borrow the shares to short them or to buy them in a short squeeze, etc. But in our market, we can buy and sell randomly without having to borrow and hold or anything like that. So the market, just to review quickly, are windows of opportunity, and again understanding the concept that when these markets open, specifically the equity markets, and we'll talk about that opportunity last night prior to the equity market opening in New York, Asia 8 to 11 p.m., Europe and London 2 to 5 a.m., New York 8 to 11 a.m., New York Eastern Standard Time. Now for London and New York specifically, I usually target that middle hour looking for that opportunity. Asia can sometimes move right away in that first 15 minutes, but we saw an example of a middle hour trade this morning, or towards the end of that first hour trade this morning. But this opportunity with the short squeeze happened right at the beginning of the 12 candle window. So the short squeeze is a situation where we have sellers entering into the market. We had a high put in place in that first 45 minutes of the Europe Open. In London, the market pulled back at 50 for a move back down, and then the market pulled back over the next few hours, heading into the US 12 candle window, working into double zeros. We had 1 push, 2 push, and then in our last 15 minutes we had a 3rd push down. Now, understanding that we have sellers in the market, sellers are in the market and they are expecting this to tank and blow right through the floor. Along the way, we have shorts entering the market lower and lower down. And of course, they've got trailing stops. We may also have take profit orders on traders that have shorted the market up top. And we have the previous day's high from Tuesday, the high of the week as well. At the same time, we have a 1, 2, 3 template making higher highs. So we've got this creeping trend down. Now, we talked about creeping trends in previous videos. Creeping trends will end in one of 2 ways. They will either capitulate in the direction of the creep, or in the example of the short squeeze, they have the potential to reverse and explode through all these lower highs. Now we have buyers waiting on one side, we have sellers on the other. When this market was heading into our 12 candle window, in that last 15 minutes prior to the market opening, we saw this market hanging down here, tempting traders to get in. Right down, again, the visual presentation on the chart, watching it live, and we'll look at that in a second, is that this market was going to blow through the floor. And this is a classic example of how the algorithm or the electronic market maker kicked in right in the first minute of the US session, 12 candle window at 8 a.m. New York, and engulfed, and bang, just went straight through about 25 pips in 2 or 3 minutes. We'll just pencil that quarter line in actually so that traders can see that. But this market now has two things happening. We have buyers entering into the market. We have sellers who's either got trailing stop loss orders, or their stop loss orders the lower down that they've entered into the market, even down here. Traders who have looked at this chart in live time and shorting this, thinking this market's about to capitulate. All of a sudden, in a couple of minutes, bang, they're underwater. In another minute, they're underwater 25 pips. They might have put size on that, and all of a sudden they're underwater by a massive amount. But as we have more buyers entering into the market, we also have sellers whose positions are being closed out, and that accelerates the move even faster. Now, we saw this market move 50, 75 pips in a matter of minutes before pulling back and continuing that move. Now, when we see that explosive move, we've got a couple of things also happening. They eventually took out the previous day's high, which again, more stop loss orders. Now we also have breakout orders and traders getting into the market long, which is why we see that explosive move. But to come back to a couple of things, if you're in this trade, one of the things that I've learned, and one of the things that I've had to work on depending on how the setup is, you know, you get out with 25 pips and then you watch the market move away 150, or do you have multiple positions in where you're entering in with your same amount of risk? So instead of taking, you know, 5 contracts, you might take lots of 2, 2, and 2, but you're taking profits off at 25 or 50, at 100, 125, or leaving the last one into trail to capture the bulk of the move. Now, one of the things that is important when you're in this trade, especially as we're heading into the 12 candle window and we're not at the equity market open yet, is to understand the time decay factor. And the number one thing that I pay attention to is the 15-minute countdown timer of that move up. So that candle actually went 100 pips, I think. The 15-minute candle might have been a bit more. And so traders that are in that with a trailer and they're watching the 1 minute, but I'm watching the 15-minute clock count down because I want to know how far we're getting in that full 15-minute cycle. So as we get closer, what round numbers are we at? We went through 50, then we went through 100, we went through 125, and eventually towards the end of that 15-minute cycle, we started to encroach at the 50 pip level, the round number 50 level after a 150 pip move up. I want to emphasize that you are going to see these trade setups all the time on gold. They might be short squeezes, we might see a bull squeeze. We'll see them in London sometimes, we'll see them in the US. Often the US can have some massive moves. Again, as the day evolves and the range expands, we can see high to low trades, or again the reversal of low to high trades. So these 150 pip, 300 pip trades sometimes happen on gold on a fairly frequent basis. And I just want to revisit, this is what has attracted me to gold, because there is such a huge amount of reproducible behavior that happens week in and week out, day in and day out, specifically at these timings, and specifically at 50s and double zeros. So important. And when these opportunities present, so we've got all this stuff in the news right now about Bitcoin, Tesla, The stock market's at all-time highs. GameStop, silver. People talk. We'll look at some examples on the British pound this week as well. But the difference with gold, for example, is that gold will move 25 down, 25 up, and 25 down with some very good trades, or 50 pips. Whereas the pound may move 25 over the course of an hour. We've already had 75 pips of tradable clean movement in one session. You're done. So coming back to this specific trade setup, when you have an opportunity like this, these are the trades that I target for scalable trade setups. These are the ones that I'm really looking for as the day evolves. The other trades are trades where we have the opportunity, where they're fairly good risk-reward opportunities. They're not massively asymmetrical in terms of 5 or 10 to 1, but they are still tradable. And we talked about my conviction meter on certain trade setups. Okay, so certain trade setups, if I'm feeling it's a 25 to 50 pip move, I'm going to be in my medium risk category. But when I have the short squeeze opportunity for a massive explosive move, and it's setting up with the 33 style trade setup, so the third push on a third push down and a 1, 2, 3, and the reversal right specifically at those timings, those are trades that I'm prepared to position in, get in, and also be taking money off and leaving one to carry out for that full movement. And again, I'm paying attention to the clock. So we're not trying to hindsight read or anything else. These are very specific tradable setups based on time, round numbers, but the timing window is critical. That's going to happen again and again and again, and 90% of those trade opportunities are going to be in that first 2-hour window. New York occasionally will get a 3rd-hour trade, but usually the market has already extended way out or way down before it pulls back in at the end or just outside of that 3rd hour. London, typically, that London Open, the New York Open is good for 50 pips. London Open is good for 25 to 50 pips. We might get 25, we might get 50, we might get 100. But typically there's going to be a minimum of 25 and 25 in each one of these sessions. So that's 50 pips a session. Are you going to get them all? No. But again, as we've talked about in the previous videos, the skill set needs to be developed. You're going to see different variations of these setups over and over and over again. But this type of setup, people piled into GameStop. They're buying this. I don't know what's going to happen with GameStop, but we see these opportunities every week in gold. So with this, if you can master some of these setups and recognize them as your high conviction, or these are some of my high conviction trade setups for 100 plus pip move. And again, we're talking about a 12, 13 pip stop on that trade. So, and again, as evidence, as we'll look at, when they go right away. You're at break even in a couple of minutes. You're probably taking profits after 5 or 6 minutes, and that market continues to go, and you're either out of the trade and you got your 50 or 75 or 100 pips, or you're holding on that second or third lot and you're riding it out and squeezing the maximum amount that you can and paying attention to that 15-minute rotation in that cycle. Especially if we're in the trade and it keeps going, maybe we're now going to get to the end of the hour and we're heading in towards that equity hour. We could be seeing a top put in place or a pullback for a stop hunt back against those traders. Let's take a look at the charts. Again, thanks for a ton of great feedback. Stay disciplined, stay focused, keep getting better, and may the markets go with you.
Yesterday was a textbook perfect example of a short squeeze on gold heading into the US 12 candle window. We can see that the market heading into the day was trading inside of 50s back and forth, even though we extended out 25 pips the previous session. On Tuesday, as we headed into the Wednesday's session, Asia, we had the 3 pushes down into 50 and then a 1, 2, 3 squeeze in the Asian session. So again, we talked about this yesterday. We had the move back up, hitting stop. So again, looking at that 100 pip box from 50 to 50 as our high and low area. The market in the Europe open went up to hit stops before pulling back in, and then London putting a high in place and then working down into the round numbers in 3 pushes. Now, as we headed into that U.S. session, we had 1 push, 2 pushes, and a 3rd push underway just prior to the 8 a.m. New York Eastern Standard Time window. Now, I've talked about the importance of understanding the clock more than anything else and the round numbers. Again, traders, when you've been following this long enough, you're going to see these opportunities present, but also understand that the clock is probably your best friend. Knowing that these opportunities, when you see them on the chart, the timing window is critical. And we saw that breakdown again in live time. Traders are licking their lips thinking that this market is about to capitulate down through the floor. Again, when we look at the 15-minute chart, they're envisioning this potentially maybe taking out the low of the day or getting traders stopped out from the Asian session. That's a 50-pip move down. And as we head into the last 15-minute candle, prior to that 8 a.m. New York window, we get 1 push, 2 pushes, 3rd push down. Traders are looking for this to fall right through, and then all of a sudden, second candle of that new 15-minute bar, we get our W formation on a 3rd push engulfment. This candle close with your fill price, depending on your spreads, roughly around 95. The low of that candle is at 80, so you're looking at a 15-pip stop loss. But when we come back to our charts, from our 15-minute chart, we have lower highs all the way down, and again above each one of those highs, of course, our stop losses, potentially breakout orders, pending orders, trailing stop, take profit orders, whatever they may be, but they are all buy orders to close out existing positions. And then, of course, we have the previous day's high. Now, this is the 15-minute chart. We may have other multiple orders on smaller or larger time frames in this area, but we have a short squeeze. We have the first push, we have the second push, and then we have the 3rd push, which of course we see on the 1-minute chart. And again, these opportunities are going to show up all the time, as we saw in Asia, a different variation of a squeeze. After a bottom rectangle, 3 pushes into a low, and then a 1, 2, 3 reversal. The pin follow through, putting heat into traders who are right. So a 45 minutes, 3 15-minute bars, 45 minutes in before this market reverses on the 15-minute chart. 1-minute traders had the opportunity to position themselves down at 50, but in the New York session, again, we talk about pre-program profit targets. When I'm getting in on the 1 minute, I'm looking for 50 pips on an explosive move like this on the first position. So I want to be making sure that I'm taking something off the table as the market's moving. So the first position is out with 50, but then I'll have a trailer in potentially. That trailer may be for 75, depending on the move. I may have a 3rd position in now where I will just leave that, and that's where I'm paying attention to my 15-minute clock in my right-hand corner. So when this market's trading, as we can see here, the first 15-minute candle closed up at 18,441. So just below, it's pinned up to 50. So this market has already done basically 75 pips from top to bottom. So as that 15-minute candle ends, so that second position may have been out with 50, but that 3rd position, now we see the explosive move continue, and now we're watching that next 15-minute bar rotation in terms of timings. It goes right through the double zeros, pulls back, and immediately continues. But as we approach the upper boundary at the 50 level, we're into the 45 minutes into this hour now. Potentially, we could be ending the end of this run for that market. Now we see the little micro M structure getting put in place, and then towards the last candle of the hour now, the market pulls back down and starts to consolidate. So again, when I'm in an explosive move like this, we could see the equity markets open and continue, but as I'm in this trade and we've moved 150 pips, I'm definitely potentially going to be taking money off the table as that 15-minute cycle ends and I'm at round numbers, again 50s and zeros. Now this market could have extended up to 75, but towards the end of that 15-minute rotation, I would still be looking after a 150 pip move to be taking money off the table. But this is a classic example, zoom in a little bit, of a textbook perfect short squeeze. Again, some short traders thinking this was going to capitulate and blow off for another 50 pip move. And immediately as the timing window kicks in, we see this market engulf. And this is a fantastic example and important to understand. When they clear a lower high level, these traders are trapped. And when they do it again on the next bar, these traders are trapped. And when they clear out the highs from where that move began above double zeros, and you can project that area across, this is a great example of them not coming back to allow losing traders to get out either a break even or with a smaller loss. They pull further away if they haven't had stops in the market to not only go and hit other stops, but potentially to margin out traders who may be short of this down low, who do not have stops in place, and their losses continue to grow until they either close out, blow out, or their positions just explode. So again, eventually when the equity market hour kicked in, we saw that lower double top, and the market eventually comes right back down to where it started from. Call that the house. Goes up, puts the roof in place, works the high, drops back down inside of our EMAs, goes sideways, another squeeze for 25 straight through the lows. But this market, again, you'll see this behavior over and over again, where they will not necessarily always have a squeeze in the opposite direction. It could be a trend trade blowing off in the direction, but this was a textbook perfect opportunity to enter into the short squeeze last night for an explosive move that was over very quickly. And again, keeping traders trading simple and stress-free. So keep it simple, traders. Stay disciplined. Have a great trading session. Hopefully you got value from today's video. Thanks again for the comments and feedback, and have a great day.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.